Good morning. Welcome to Market Day Report. It's a Thursday. We're glad you're with us this morning, and we get a couple of reports today. We get a quarterly hogs and pigs report that comes out this afternoon after we close the markets down. But before we open the markets, we get a weekly export sales report. We'll talk about that with Brian Hoops in just a moment. First off, let's look at overnight trade action for corn. 0.75 cents lower on the December, 414.5, and the March down 0.75 penny at 432.5. Soybeans 6.25 higher on the November, 1059.5. The deferreds 4.5 to 6 cents higher. Wheat will start Chicago 5.5 higher front month December. 594.75. July up 4.75 cents. And for hard red winter wheat, 6.25 higher on the front month, 587.25. July trades 6.15. Spring wheat 5.5 higher on the December, 622.5. And the cotton market, which struggled in action yesterday, overnight 32 higher, 73.52. Okay, Brian Hoops, President, Midwest Market Solutions. Let's start with the weekly export sales.
That's a good place as any to start, Tony. Good morning. So we had exports out this morning. For wheat, it was a marking year low, unfortunately. 5.8 million bushels. To put it in perspective, we need to be averaging over 10 a week to hit the USDA forecast. So it was a disappointing number. The corn market also was a disappointment. Corn was only 21.1 million bushels. And again, to put it in perspective, we need over 35 million each week to hit the USDA forecast. So both of those numbers are disappointing. We saw corn pull off of its highs and trade lower just after the export sales will report right before the markets close. Now, the bright spot was soybeans. Once again, it was 57.9 million bushels, well above what we need to be on a weekly basis to hit the USDA forecast. In fact, China was a buyer of about 32 million bushels of that total. And one other thing about these export markets, especially soybeans, we started off the marketing year way behind the previous year. In fact, we were the second worst export pace of the last 19 years. We've since narrowed that gap, and we're almost exactly now even with where we were a year ago. And that's in a big, large part thanks to China being an aggressive buyer during the month of September. There was also a private export sale announcement this morning. This is back-to-back days for corn, 115,000 corn again to Mexico. So that may give us a little bit of support on the opening. You know, the pattern in the last couple of days has been to fade the overnight in that first hour of trade. We'll see if that happens again. Tuesday morning we were higher. We faded during the day session. Yesterday we were lower, and the market didn't plunge to new lows, and we started to rally. We had a pretty good rally. So we'll see if this, if the soybean market here in the first hour can go and make new highs, take out the overnight highs. If not, I think we're susceptible to some profit taking again, like we've seen the last couple days. The forecast for South America isn't great, but it's slowly improving. They did have some spotty showers in Mato Grosso yesterday. There's more on tap for the weekend, just very spotty, not enough really to break their drought. Even in the 6 to 10 day, there isn't enough rain there to break that drought, but it is kind of a sign that rains are starting to come during the normal seasonal pattern that really starts around the first part of October to get additional rainfall.
Okay, so we've covered the row crops. Hang on, we'll come back, talk livestock. Market Day Report continues in a moment. It's Market Day Report, and 9:20 Eastern Time, 8:20 Central. If you're not in either one of those time zones, I bet you know what time it is already, but it's time for another cup of coffee for me as we get things going. Not talking coffee futures right now, but let's talk livestock futures, and we'll start with the cattle market. Yesterday, live cattle down 15 at 183.05. The December lost 7 to 184.32. Deferreds, though, were higher, as we have seen about a 2.6% increase week over week in the live cattle market. Feeders higher across the board, led by October, up 22 at 246.02, and a 65-cent gain from November. Coming up at 2 this afternoon Central Time, we get a quarterly hogs and pigs report. In front of that yesterday, October hogs 82.47, 35 higher. Deferreds were lower. Export sales out this morning and really breaking down what we've done the past couple of weeks. And to help with that, Brian Hoops back in Midwest Market Solutions. And as I look at it, really lower across the board on everything, both beef and pork.
You're right. And the beef number is probably the most concerning. We're below where we have been in the recent weeks, near that marking year low. Only 10 million tons exported last week. That combined with the cutout values that we saw yesterday afternoon, I think it was 372 lower choice and select was like 359 lower. That's a pretty significant drop in the cutout values. Packer margins already deeply in the red. They're going to slip even further, probably over $50 ahead now, $58, $59 ahead in the negative. I wouldn't be surprised to see the futures market open 50 to 100 lower off of this news. This is not very bullish for the cattle market. Now, October is already factored in where the cash markets are going to be, and that hopefully is around 183. So that probably is a little bit immune to the selling. But these deferred contracts, I think, do come under some selling pressure this morning. Pork exports were 28 million tons. Not a great number, but certainly not a disaster. And as you said, hog and pig report this afternoon, cold storage this afternoon. I don't think these markets, the hog market anyway, really varies too far until we get the numbers released. So I would expect choppy trade, kind of back and forth action in the hogs, but probably to start off with, at least in the cattle market, some lower pricing opportunities.
So Brian, as you describe the cattle market, I get this visual of being out over our skis.
Yeah.
And for anybody who doesn't snow ski, what that means is if you're skiing in powder and you get out in front of your skis, you go face first into the snow. Not a good idea. Plus, you have to dig yourself out. So with just, 10 seconds or so, is that a good analogy?
It's a pretty fair analogy, I think. We've been higher 8 days in a row in the February cattle. They probably are looking for an excuse to turn lower. Well, they've got one this morning, and I think we're going to see a lot of pressure here to open the bell at 8:30.
Well, and now, for the record, it doesn't always happen that way. If you ski on ice like I do, you can be on the front of the skis all the time. Brian, thanks for coming by. Brian Hoops, President, Midwest Market Solutions.